We're going to start with a very simple, basic system, and then I'm going to show you different ways that we can kind of trade around it. I mean, we can trade a system. We can modify the system to match your personality a little bit. We can try to filter and fine-tune the system, or we can actually trade against the system. That is, to use the system as a filter and say, here's where we're going to buy, but unless it gets there, we're going to look to be sellers. So we're going to use the exact same thing about 4 different ways. The reason for doing that is my belief, and this is a theme I'll probably come back to periodically throughout this. Psychology is a hot buzzword. All right, everybody here probably has heard psychology is so important. Psychology is 80% of trading. All right. Well, if you don't have a workable methodology, psychology means squat. I mean, you got to make money first, and then if you have a workable methodology, then psychology is 100%. I mean, you just have to execute it. But we all come here with our own psychological bent. Some people like to try and pick tops and bottoms, regardless of what everybody tells you about how that can't be done. Other people like to trade very frequently. Other people like to hold trades for longer periods of time. All of those things are possible. You can make money utilizing any of those techniques. The key is just that you have to be doing something that feels comfortable to you in the first place. And I'd like to, if you don't get anything else from me, I'd like for when you're analyzing a methodology to determine if you want to trade it, forget how much money it makes. Don't analyze something because this system makes more money than this system. That's a very poor way to judge things. Guys like Richard Gettess, who trade from a very long-term perspective, that's a very, very viable way to trade. I have no quarrel with that at all. I'm totally incapable of trading that way. So it's irrelevant to me how much money it makes. It's of no use to me. And that's the way you need to think about things. What can you make the most money with, not what makes the most money? Okay? In fact, I might be able to prove that. How many people in here made $100,000 in a year trading? So that's why you're here. Oh, hi. Okay. Okay. I don't want to steal your secrets. Just basically tell me what you did. I mean, moving averages, price pattern. What do you do basically?
Price pattern was in most of it was in
one market. Okay. And are you holding trades a relatively long period of time, short period of time? Okay. Okay. Anybody else? Anybody else made $100,000 a year? How about 50? Okay. How did you do that? Just roughly. Okay, now I guess I don't need to go any further. That kind of proves my point, doesn't it? Stochastics is all about the market's dropping, we're going to look to buy it. The market's up, we're going to look to sell it. I'm oversimplifying, of course, but that's basically what it is. He's looking at price pattern, holding things for a while. It doesn't matter. There's a lot of different ways to do this. So let's get started and see if we can't show you a few. I'm not giving you the Holy Grail here, because I don't have it. Okay, that's the most honest thing I can tell you. What I'm going to show you is a good system. It makes money. But I wouldn't kid you that this is the best system that I know or that I've never seen any other systems that are any better. Hey, I can actually read that. Can you guys see it okay? Good. Okay, what we're going to talk about is just a simple, basic volatility breakout system. I'll bet you none of you have ever heard of that concept before, have you? Okay, this particular system, we're going to use 65% of 2 days at true range. And why are we going to do that? Because I played around on the computer and that looked kind of good to me. And that's about as complicated as it gets. I mean, I don't do anything real complicated. The least squares linear regression slope oscillator from an outer Mongolian head and shoulders with a cherry twist, I can't handle it. I just do real simple, straightforward stuff. So 2 days true range. True range, in case anyone is unfamiliar with it, true range is where we just look at the high and low of the day and we call that the range. But if that day had a gap from the previous day's close, then we go back to the close and consider that part of the range. For instance, if the market's gapped up over the previous close, the range isn't the high to low, it's the high down to the previous close. And we don't do that just because we like to make things complicated, although we do. That's a little aside. I don't know if you know that. Traders, by and large, are a very intelligent group of people. They tend to be well educated and have good, sensible backgrounds, and we like things to be complicated. If it's too simple, we don't feel smart enough, so we see if we can complicate things a little bit. And, I'm a street kid from Detroit, guys. I can't handle any of that. The true range encompasses the previous close, and we're going to take 2 days of that so that we don't get bogged down with just one little tiny day changing our parameters greatly. And we'll take a 2-day average of that and 65% of it. We're going to take that 65% and displace it from the next day's open. I have a personal bias about that. I assume almost all of you have at some point traded a volatility breakout system, basically. I mean, it's like, you know, it's been around longer than I have. Actually, it's been around longer than Larry, and Larry's a lot older than I am. I like displacing volatility from the open, and I think there's a good reason for that. The open, statistically, proven by Haddity and several other people, is within 10% of the high or low of the day, roughly 90% of the time, which is a pretty incredible statistic when you think about it. So I like displacing this volatility from the open because I think the move away from the open is more significant than the previous close. You get so many gaps off of the previous close that come back as soon as you get filled. So we're going to take 65%, 2 days true range, and that's going to be our breakout point. If it goes that far above the open, we'll buy it. That far below, we'll sell it. And that's it. No exits, nothing special. We're just going to always be in the market from one to the other. I bet you that's a radical concept, right? That's really complicated. But as you can see, it works reasonably well. We've got what? This is over a 10-year period. That's the Deutschmark. Over a 10-year period, we're making 75,000 in the D-Mark. About 43% of the trade's accurate. Oh, we make about 91,000 in bonds. Also 43% accurate. We don't make a whole lot of money in crude oil, but we do make money. About 21,000. So we're trading a bunch of markets with the same system. Yeah, there are $50 slippage and commission in each of these. Okay, thank you. And in the S&P, it makes 165,000. Gosh. Wonder if I have any of these on. Well, you can see here, where you asked the question, did it make money on the short side? You can see here a little bit. The long side trades, can you see that? I'm sorry. The long side trades made 129 of the 165, which isn't uncommon in the S&P. I mean, it's hard to find too many downtrends in the S&P. You can find a day or two, and they're worth trading, believe me, but not a lot. So anyway, we put these things together, and let's see, 165, 94. We're making almost 1,000% on this system over a 10-year period. So non-compounded, that's 100% a year. Now, I'm not trying to tell you this is the greatest system I've ever seen, but how many of you are making 100% a year? I mean, if you got a system that said it was 45% accurate and had drawdowns of this size in it, you wouldn't be interested. You wouldn't. You'd get one of those brochures and you'd pitch it in the circular file real fast, and maybe you shouldn't. Maybe there's something here we can make money with. Okay, so everyone would agree that system, as simple as it is, makes money? Yes? Okay.